welcome to the Deep Dive. Today, we're zeroing in on something really vital for any financial institution looking at blockchain.
That's right. We're talking about core developers.
Exactly. We're digging into who they are and why they matter so much if you're thinking about blockchain for things like payments, compliance, or, data transparency. We're drawing on some great insights from Frank Mazza at Metal Blockchain here.
Yeah, his take is spot on. Blockchain isn't just off-the-shelf software. It's fundamental infrastructure.
Infrastructure, okay.
And like any building, it has architects. Those are the core developers. Our mission today is really to clarify just how crucial that role is, particularly for banks and fintechs.
Okay, let's break it down then. Who are these core developers really? What's their specific job?
So think of them as the engineers who actually build and crucially maintain the blockchain protocol itself, the foundation.
Right, the foundation.
They design the core rules, they handle the network upgrades, they often embed compliance features right into the base layer, and they patch vulnerabilities. They're the architects, not just, someone using the finished product.
Architects, not just users. I like that distinction.
Mazza has a great analogy. Trying to build on a blockchain without having the core developers align with your needs.
No.
It's like being a tenant in a building.
Okay.
But you don't have a landlord, you don't have a lease, you certainly don't have the building plans. You might have a key to your apartment, but you have zero control over the foundation or the structure itself.
Wow. Okay, that really clarifies the dependency. And this becomes even more important for those private permissioned blockchains, right? The kind of financial institutions seem to be leaning towards.
Absolutely. Those private chains are attractive precisely because they offer more control. Tighter compliance with rules like BSA, AML, GDPR, plus potentially faster performance and governance structures you can actually tailor. But you only really get those benefits maximized if the core developers are building with those institutional needs in mind from the start.
So flipping that around, what are the risks if a bank, say, just decides to build their new payment system on a big public layer 1 blockchain without really engaging with the core devs?
Oh, the risks are pretty significant. First off, compliance misalignment. Public chains, well, they just weren't designed for the specific, often complex regulatory landscape of finance.
Right.
Trying to bolt on compliance later, that gets expensive, fast. And frankly, it might not even be fully possible or effective.
Okay, what else?
You have very little, if any, say in the protocol's future. The roadmap, when upgrades happen, what security features get prioritized, you're just along for the ride.
Not ideal for mission-critical systems.
Definitely not.
Ugh.
Then there's cost and performance unpredictability. Think gas fees, network congestion, transaction speeds. These can fluctuate wildly on public chains, makes planning difficult.
And getting help if something goes wrong.
Yeah, support can be, let's say, opaque. There isn't usually a dedicated hotline for when your institution hits a snag. It's not built for that kind of enterprise-level support.
That paints a pretty risky picture. So the alternative, working closely with core developers, that's the recommended path.
It really is. It means the institution can actually co-design the infrastructure. They can help ensure their operational needs, their regulatory requirements, their security standards are baked in from day one.
So if you're a financial institution evaluating different blockchain options, what are the non-negotiable questions you need to ask?
Great question. You absolutely need to know. Who actually controls this protocol? Is it truly decentralized, or is there a core team we can work with?
Okay.
Can we customize it? Can we set up our own governance for our specific instance or chain?
Makes sense.
Will the underlying infrastructure evolve to meet our future compliance needs? That's huge.
Yeah.
And maybe most importantly, do we, as an institution building on this, have a real voice at the protocol level? Can we influence the direction?
And if the answers to those are mostly no?
Then you're likely taking on a lot more risk and potentially building up significant technical debt down the line. You'll constantly be fighting the platform instead of leveraging it.
What if you get yes answers?
Then you're actually future-proofing. You're building your innovation on infrastructure that you have a hand in defining and shaping. It's a partnership.
It comes back to that quote you mentioned earlier from Mazza.
Exactly. In blockchain, your developer is your destiny. Institutions that align with core developers aren't just using the technology.
They're shaping its future.
Precisely.
So the big takeaway here seems crystal clear. For financial institutions moving into the blockchain space, understanding and aligning with core developers isn't just some technical detail. It's actually a core strategic imperative. It's about control, it's about compliance, and it's about ensuring your innovations can actually, last.
Didn't agree more. And that leads to a really interesting thought for you, our listener, to consider. As we see more and more financial institutions exploring these decentralized technologies, how will these crucial relationships, these partnerships between established finance and the core architects of blockchain, how will they ultimately reshape the future